Good morning and welcome to GrainTV for April 19th, 2012. To my right is Cody Bells and I'm Brock Shimbino. In the overnight we saw double-digit gains for the grains. Cody, what was driving the bullish sentiment last night?
Well, we had some support levels hit for corn and wheat. We also had a Spanish bond auction that was very positive. People are paying attention to Spain because it's really kind of that next domino to fall here, and they're looking for any kind of indication of a worsening conditions over in that European Union debt crisis. So I don't think they got that. They didn't get any kind of worsening conditions. I think that adds some confidence to the market, and we're going to see commodities as a whole up this morning.
And speaking of commodities, the traders are really looking for the export sales report this morning. The USDA published it this morning. What are we looking at for numbers over there?
Well, it was disappointing mostly for corn here, coming in at 300,000 metric tons. New crop sales were really a non-issue. Beans came in at 374,000 metric tons. That was all right. It's kind of on par with what we'd expect seasonally. But new crop is really what was outstanding, coming in at 845,000 metric tons. Very positive for beans here. And then wheat coming in at 365,000 metric tons. Nothing to write home about, but certainly not terrible.
And I think the new crop bean sales is the big story here. We saw another 110,000 metric tons in the overnight session, and since last Friday we've seen 400,000 metric tons for the new crop season 12-13. So I think that is going to add some more bullish sentiment to this soybean market that rallied sharply last night.
Yeah, I agree. I think this definitely will add a bid to soybeans this morning. If you look at the overall progress on where we need to be right now to meet the USDA's forecast, right now we're ahead of pace 8 million bushels for corn, but we did decline 10 million bushels as a result of this relatively disappointing export sales report this morning. As a result of that bar right there, the yellow line represents seasonally where we need to be at this time and the sales we need to see each week. And as you can see, we're unable to make those sales for corn. That does drag us down, but we are running right about pace with the USDA's expectations. Beans, no game changer here. 8 million bushels ahead of pace, declined only 2 million bushels, came in about on par with what we would expect to see this year. The EIA also came out with some numbers for corn, an ethanol production and stocks numbers. Brock, is that positive for corn this morning? Will that add a bid?
You know, I don't think it's going to sway the market one way or the other. We did see production reduce a little bit from last week. We had pretty good numbers last week, but we are down 1.3% from last week. Versus last year, the production is actually up 3.3%, comparatively this week last year. Stocks is kind of the concerning thing for me, as I see 1% increase this week, but year on year we're actually up 9.3% now. That shows that there's a lot of production, but not as much demand needed for that production that is being made. The thing to note, though, is that we are about on pace for what the USDA is projecting us to use for ethanol for corn. Last week we used 94.17 million bushels. The USDA was projecting 94.11, so we're about right on pace with what the USDA is expecting.
Well, that sounds fair enough. We're going to take a quick commercial break. When we're back, we're going to watch the markets trade and also show you some key support levels that you should keep an eye on in the next couple days.
GrainHedge is more than just futures trading. Clients receive our cash grain optimizer showing spot and forward bids within 200 miles of your farm. We take into account your trucking costs to find your best-selling opportunity. We provide in-depth basis mapping, historical basis and cash price charting. Every day we show you your best price and if it meets your profit goals. Contact GrainHedge today to get started.
Welcome back to GrainTV. The markets are open in Chicago, so let's turn over to the FireTip trading software for the live quotes. Corn is up 15.5 cents on the old crop. New crop is up 12 3/4. Soybeans up 15 1/4, and wheat up 12 1/4 in Chicago, and Kansas City up 10 1/2.
Guys, we talked about this a little bit yesterday. What we're looking at is the 2012 new crop wheat, so that's the July, and this is Chicago wheat. And we just we drew it yesterday, but this 613 level is a very key support level. And if you look back, it has been trending down for some time. So this will be a battleground probably in the days to come. We did have a rally last night, but the question is, can we sustain that rally? And for wheat, I'm not necessarily sure we can. Let's just take a look also at corn. This is what's really fascinating. Just look at the range that we've traded. And we're looking at May corn. If you're looking at this, just notice $6, very key support level. We touched on it back here in January, and then again right before the report, and then we touched on it yesterday. If you look at the trade on the 15-minute chart, look at yesterday's action. We just we traded down sharply down to $6, and we dipped a little bit below it and then rallied back. And then in the overnight session, we see a continuation of that rally. The bottom line here is that when you're looking at new crop wheat, I'd look at 613 as a key support level. If we go below that and we close below that, then I think that there's a good chance we take another leg lower. And as for corn, I'd say $6 is that key support level. If we go below that, there's a good chance we could drift off and head lower. But we are range bound, so there's probably a higher chance that we move toward the middle of that range.
Make sure you follow us on Twitter for updates throughout the day. You can find us at GrainTV. Check us out on Facebook, or you can get a hold of us at 877-472-4607. This afternoon on Ag Web Radio, we'll have Cody Bills giving the closing commentary.